All right, today's show we have Jake Clopton, and want to get to know him. So, Jake, welcome to the show, man.
Appreciate it. Thanks for having me on.
Yeah. So, give us a brief intro, 30,000-foot view, what you are, what you're doing, and then we'll dive into your story.
Sure. What I am, what I'm doing. For the past 16 years, I've been running Clopton Capital. We're a commercial real estate services firm. My day-to-day is arranging debt product for real estate deals all over the country. But we also have an equity division. We're an insurance agency, 1031 QI. We do commercial solar installation, and we're trying to build up a buy-sell side as well, like a brokerage.
So you guys are really vertically integrated.
Yeah. And it started with just capital market stuff. I started back in like 2008-ish era, right? And I was just helping people arrange debt for, businesses and real estate deals all over the country. And then, it just kind of grew from there, which it makes sense to expand, right? It's all the same people. So.
Yeah, for sure. Well, let's get into that. So how did you, before 2008, school, what did you do?
So I'm from like upstate New York. I grew up in Rochester, and I went to Canisius College in Buffalo, New York. It's a little bit of a journey. All right. So I originally started as pre-veterinarian. So I went to Canisius, went a little bit different way on that one and ended up with an economics degree.
Okay.
During college, also, I was in OCS for the Marine Corps, and I was going to go to flight school. But when I graduated, I had already done like the program, so I was going to the second half of it. And when I graduated, they told me like, "Hey, yeah, you can still go to flight school and do all this, or do all this stuff." But there's like I think they said like a 5-year wait to go to flight school to fly jets and stuff. So I was like, well, that sucks. What do I do in the meantime? And they're like, well, you can recruit people. I was like, guys, I'm not sitting in a retail center like talking to high school kids. Like, no. So I kind of trying to figure out something else to do, and decided to sell my stuff and move to Argentina for 2 years. I didn't know anybody, just kind of bought a ticket and showed up there.
Yeah.
Which I thought was a great idea until I was landing in Buenos Aires and I didn't speak the language. I didn't know anybody and didn't have a hotel set up. And I was like, okay, it got real, really fast. But no, I ended up staying there for a long time. Came back to the U.S.
What'd you do there? Obviously you had to make some money. So what'd you do while you're there?
I was trading stocks.
Okay.
I traded stocks for myself kind of like all through college and stuff. And my dad had gotten me into it when I was in high school. So that's what I was doing there besides partying also. But yeah, I was trading stocks for myself. So.
That's cool.
Yeah. And then decided time to come back to the US and, I wanted to be a trader. I knew that, but I wanted another kind of like period of time in between that. So I actually ended up doing accounting for a Club Med resort for a year. In Florida. Then after that, moved to Chicago, interviewed with some electronic trading firms. I ended up, so I had this really weird background. And I remember going to a recruiter and they were like, well, you have a really weird background. And I remember talking to this girl and she was like, I think you should just walk into these trading firms and just talk to them and say you want to work for them. Which is what I did. And I ended up just getting a job at this awesome firm. I remember there was like 3 rounds of statistics interviews or something like that to get in there. And I think they interviewed like 500 people for 5 spots. And I got one of them. And
wow,
ended up trading interest rate hedging products. If you guys remember LIBOR, that I traded 3-month LIBOR for a while until 2008. And Fed funds futures and 3-month LIBOR. And then when 2008 hit, all that just, evaporated. So I had to find something else to do. And since it was a credit crisis, the biggest problem out there was businesses couldn't find credit. So my idea was to start a company that's helping people find credit. And so I had no background in commercial real estate or anything like that. But I just started cold calling banks and private equity funds and anywhere I could find money. And then I would find some and I would just go out and say, hey, we have XYZ, basically selling money, right? We can finance this stuff. And
well, let me pause there, because that's ballsy. I don't want to say ballsy, but that's one, it's really creative, right? So what made you, looking back, if you can remember, what made you think, like, how did you find this? There's a problem with this in the market. I found a solution. How did you kind of get there?
Well, when I the stuff that I was trading is all credit product and interest rate hedging product, stuff like that. So we paid a lot of attention to what was going on in the credit markets. And there was this residential crisis that happened, right, in 2008. And that happened very quickly without anybody knowing it was, very few people know it was coming. And the thing that everybody kept saying was coming next was this commercial debt crisis, right? That there was going to be all these commercial loans and people couldn't find, ability to refinance and this X, Y, and Z. And I don't know, that narrative still is going on today. Yep. But, I was like, well, I don't know. Electronic trading was just getting crazy. I mean, I was still trading like manually back then. And, all the algorithms and bots were taking over. And, and I was kind of overworking from 1 a.m. to 4 p.m. every day that I did for years. So, looking for something to be more entrepreneurial and, work for myself. And that was the idea. I was like, well, there's the biggest problem out there in the crisis is credit and finding loans and all that stuff. And, my idea was like, hey, the best time to enter any industry is when there's pain and a crisis going on, right? The barriers of entry just kind of come down and people are much more willing to talk to anybody to try to get things done, right? Like the time to enter, I think any industry is not when it's just on fire and doing well and there's all these incumbent people, but like more like when it's just upside down and, everybody's scrambling to try to figure things out. Yeah. So the idea it wasn't originally commercial real estate. It was just an idea of finding credit for people, and not having any contacts or network or anything in that space. I'll be honest with you. I think the thing that was number one that allowed me to do that was just the willingness to just make cold calls and do that literally from my apartment from 8:30 in the morning until 5 o'clock at night all day long for years.
And you were younger then too, right?
Oh yeah.
Early 20s, it sounds like.
Yeah, like mid 20s. I mean, I'm 41 now.
There's not many.
John, that was a minute ago. Now that I'm putting math on it.
So. We're about the same age. I kind of started 2006 with an outside sales job. And I remember having to sit down in front of my boss and I think one or two other people, like other coworkers, and make cold calls. And it was the worst thing in the world. So for you as, early mid 20s person doing that all day long, how do you think you got the nerve to do that? Because not many people can cold call and are comfortable.
No. The weird thing is I never even thought about it.
Yeah.
I was just like, it's literally noise on the end in my phone. I was on the other end of a phone line, right? I mean, I didn't even think about it, especially, and also I think, a lot of people that have, that kind of like anxiety to get on the phone and, hesitancy to do that stuff. I mean, just so you know, it burns off after about the first 10 calls. I mean, at a certain point, I've probably made thousands of cold calls. You get to learn a pattern and, how to, kind of get through to people. And you certainly get told to go F yourself more than enough times, but you can't take it personally, right? They don't know you. Yep. I've certainly worked with more than enough. I remember hiring this one guy. He worked at a trading firm with me. And then, when I was doing this stuff, I ended up hiring him. And you're not wrong. Like I think to make one call. Like he would like make a call, and then he would have to go circle the block and have a cigarette, and then come back and have another one, and like build himself up to it. You know what I mean? It was like the Eminem like rap battle every time this guy was about to make a phone call. So some people just are not built for it, you know? But I mean, it's probably the best skill you could possibly have if you're trying to grow any business, especially something that's business to like B2B type business. And you need those relationships. You need that network. I just don't think there's really like an alternative.
Yep. 100% sales. Well, and you said something was so powerful, but as so simple. You just didn't think about it, right? You didn't think about the outcome. You said, I'm going to get on this phone. I'm going to make calls, and it is what it is, right? And I think
exactly, yeah,
that goes with a lot of things, right? That can go with obviously with business, but anything in life. That can be if you're scared to do something, if you have anxiety about something, whatever it is, just don't think about it. Remove yourself from the situation and just do it. It's easy to say that. And a lot of people are probably saying that like, well, it's easy to say it, but it's harder to do. But yeah, you just, I've had some things in my life that I was fearful of, but as soon as you remove yourself from the outcome and what you're doing and just say, I'm just going to do it and just go.
Yeah. I think, I mean, everybody has anxiety about some things, right?
Yep.
But you gotta figure out a strategy to kind of get over that. Because the longer you hesitate to do something, the less likely you are to do it, right?
Yep.
And it's funny because the things that I think you end up doing that you have a lot of anxiety that you get over with and then end up doing it, those are the things you feel best about, right? Like after you've done it, it's a sense of accomplishment and relief and all this stuff. But yeah, I mean, I think there's like, what is that Navy SEAL thing? We just 1, 2, 3, go, right? Yep. I mean, the longer you wait, your chances of actually accomplishing it just, go down and down and down.
Yep. 100%. Cool. So, let's pick up with your story again. Sounds like you're starting your own company here and.
Yeah. So, right. So I started doing with cold calls and stuff. Originally it wasn't just real estate. It was like any business. I remember doing stuff like off the wall, like financing semi trucks and, working capital and all this stuff. And then just over time, like real estate was, really what I was interested in. So was really focused on that for, the foreseeable future. For a very long time, we focused on like CMBS refinancing and stuff like that. Mm-hmm. And then broaden out to different products. Then we started adding services because, it just made sense. It's all the same people. And I really wanted to find a way to leverage the contacts and work that I've already put into it. Right. And the only way to do that was, bring on other business lines, bring on more people. I think anybody who has started a business and, one of the biggest challenges I had was like bringing on other people and like giving up that like level of control and kind of dictating stuff. I think that for some people that's tough. For me, that was tough. Right. But really,
no one that can do it as well as you.
What's that?
There's no one that can do it as well as you, right?
Yeah. It's also, it's also hard to find good people that are kind of like self-policing, you know what I mean? And I mean, we've all been there. I mean, if anybody who's had an employee and be like, you have to call somebody up and tell them to check their emails. I'm like, come on, man. Like check your emails. Like no. Do the work you're supposed to be doing, right? But like figuring out like who the best partners are and like how we want to structure things. That's worked, figuring that out has worked really well. And instead of like, I started off having like a bunch of employees, but in our business, and I don't think this is with everybody, kind of these different service lines kind of work the best with partnerships and joint ventures, other than just hiring people to bring them on. Much stickier type of partnerships and a little more self-motivated.
Gotcha. So you sounds like you grew your lending business first. How many people did you have before you started your second business?
So we were all I was doing was arranging debt. And at one point I had like 5 other originators working under me. It was 4 originators and like a underwriting guy working under me. And then we had several, virtual admins like working in like the Philippines and stuff like that, like making phone calls for us. So the team is pretty big. I mean, in commercial real estate loan originations, you can get a lot done with, a team of like a little less than 10 people. Yeah. But, again, kind of whittled that down and, like worked on more of like a back end staff. So now it's, I've run our debt side. We have an equity side that, a couple other guys run and, really worked on like the back end staff and being really efficient. And honestly, now when I first started this 16 years ago, there wasn't all the, like enterprise efficiency kind of software and everything out there. And with just a handful of people now, I get more done than we did with like almost 10 before, which is wild.
Yeah. What was your, obviously we kind of know your role when you started off. What's your role now in that business?
Overseeing all the different platforms, and my day-to-day is still arranging debt. So like fixed rate mortgages, bridge loans and construction loans. It is hard for me to find the time to appropriately scale the other sides as quickly as I'd like to, because I'm still doing this, the debt side every day. So eventually I do want to bring somebody on to kind of handle that. Like yesterday, I mean, my calendar is booked all day long from 8 a.m. until 5 p.m. every half hour. Right. So it's like, it's not a lot of other time in the day. Eventually, I do want to bring somebody on to handle that because I've laid off and delegated a lot of the other work to other people. I don't run the other sides like the insurance and 1031 and all this stuff. Other people do, and the equity side. So, but that is still what I do day to day, and then kind of overseeing the other stuff.
Gotcha. If you don't mind, I'd like to pick that. I don't want to say pick it apart, but kind of dive into that a little bit.
Sure.
Because I know, and I think you own some real estate as well, right?
I do. Yeah, we have a couple apartment buildings around Chicago.
Okay. Because I know us as real estate investors, we get into real estate thinking we're going to grow, we're going to scale this to where we've got passive income, financial freedom, and we don't have to work the rest of our lives. But then it turns into like, well, you can't stop, right? You achieve that goal, you can't stop there. And then it's like, now I have this huge not a big business, but now I've got this business and a growing business. Now I have to change roles and I have to become more of a leader, manager, delegator, and all these different skills that most of us don't really think about when we're just trying to achieve financial freedom. So where are you kind of at in that process?
I'm in kind of a transition period, I think now, because, owning real estate and apartment buildings and all that stuff is not a hands-off business, even when you have a third-party management company.
Yep.
And what I bought 3 buildings and we did some value add, and they turned out great, right? And I still have 2 of them. We just disposed of one earlier this year. I think there's something like a 3x equity multiple on that over like 5 years, which is awesome.
That's in Chicago too, right?
Yeah, in Chicago. Yeah.
Which is, I don't know many people investing in Chicago. So that's
I mean, Chicago is one of those cities where if you're here and you know what's going on and you understand like the neighborhoods and all this stuff, you can do very well.
Yep.
If you don't, you don't understand this stuff and you're not here and you're not able to just walk the blocks and everything and understand like the local areas, I think you can get your ass handed to you pretty fast.
Yep.
Chicago more so like that than other places, I think. Yep. But again, that's why I very rarely see like outside investors coming into Chicago. But yeah, I mean, I think, going forward, the focus and the thing is like, I like to stay focused on what I'm doing. Right. And, kind of working on those other assets kind of takes attention away. And, the focus now is really building out the company as, a large scale company that has a lot of employees and people working for it. And that's going to take a lot of focus.
Yep, for sure. So it sounds like your other businesses you're partnered in, and those are more passive for you.
Yeah. Like I'm partnered in a couple other things. Like we have an in-home care business I'm a partner in, and then we have an event production company I'm partnering in, and then I'm looking at investing in some other like local businesses and stuff like that. But that would be more like advisory type of stuff, not like day to day.
Sure. All right. What do we miss in your story before we kind of get into your lending products?
I think we've come to present day.
Okay.
At this point,
we're here.
Yeah.
Perfect.
Other than the fact that I have 3 kids on top of all of that, so
nice. So you're busy. Yeah. You're definitely busy.
Yeah.
Which is good. Busy's good. Productive's good. So tell us a little bit about the market. What you think, especially with the. I think this podcast will air in a couple of weeks, but just had an election. Obviously, that's probably going to change things. How do you see that changing?
I think the biggest change that the election, I don't know. The initial reaction to, the new policy that's coming in was that it's probably inflationary. That's why I think you saw like the 10-year pop way up, came back a little bit, yep. But to be honest, when I look at a lot of what's going on, like macro wise, I don't think it much really mattered who was in there. There's just things that are, at play in the system that I don't think it would matter at all who's in there. And the biggest things are, so there's 2 big things that really are not super being talked about. And I have a little bit more insight than most people because all I do all day long is talk to banks. Right. And a lot of those banks are private, and I have really good insight into like their liquidity positions and their portfolios and all that stuff. I'll talk about 2 things, and I can speak most about like, what's going on in the credit side and, of things, and not necessarily like, hey, is multifamily a good,
right.
Yep. But in the banking market, there's definitely a liquidity strain with a lot of these banks. I would say 50% of the banks that we go to ask for compensating deposits just to make a loan. Right. And they act like it's not a big deal. But if you think about it, that didn't happen before. Yep. And when I go to a bank and I say, hey, I need a $10 million loan, and I say, okay, well, I need $2 million and you have to hold it here and not move it to make that loan. That's a little strange. Yeah. It really just speaks to the fact that there's like liquidity strain, right? Most of these banks' portfolios are very full, and they're not really getting payoffs or moving, or like loans aren't really moving. There's something else out there that I don't think 99.9% of people even know exists. It's called something called the reverse repo facility. You can look that up. It's, they post like the balances. I think it's like St. Louis Fed or New York Fed. That thing had, so think of that like a savings account for banks. And that had $2.5 trillion in it as early as like a year and a half ago, something like that. It now has about 400 billion. So the Fed was draining liquidity from the system. There was still $2.5 trillion that banks had parked at the reverse repo facility. And that thing, they have been draining that thing to basically continue to like, extend credit and all this stuff. And that's about over. And I'm watching this, this relationship between, these banks that a lot of regional banks that I know are very liquidity constrained already. They're not in a bad position, but they're not in a good position to continue to make loans. Do you know what I mean?
Yep.
Like the bank will be fine, but how to understand how they're going to make more loans. And they've been pulling from this facility. They pulled over $2 trillion to maintain like liquidity that's in the system. And that's about to end. I don't know what's going to happen when that ends, because it's going to happen real soon. But to me, it sounds like there's going to be, a drying up of credit and liquidity in the bank system unless something else happens. So that's really interesting. The other thing that's coming up is, one, we have January 2nd. We have another one of these debt ceiling things. We'll see what happens there. But the other thing that's really affecting long-term treasury rates is inflation expectations and credit quality of U.S. debt. And that's what I think, this is another relationship that I've had to explain many times. And I don't think people fully understand the difference between like different types of interest rates, which I used to trade interest rates, right? So I get it. But so when the Fed funds rate, which is what the Fed lowers, right? That's a really short-term interest rate.
Yep.
And if you saw what happened when they first lowered the Fed funds by 50 bips, treasury rates shot up to the roof. And everybody's like, all right, Fed lowered rates. The rates on my loans are going to be a lot lower. Actually, they went way up because inflation really actually isn't that under control. If you look at like the CPI prints that just came out, there's some acceleration going on. And, I think what we're going to see, going forward is probably inflation reaccelerate. And at the same time, as the Fed lowers short-term interest rates, that's going to support inflation even more, right? Because the lower the rates, more inflation can kind of get out of control as the economy heats up. Yep. But they've said that, the higher risk now is to the labor market and not inflation. Also, credit quality of the U.S. debt, right? We have an enormous amount of debt, and there's an enormous amount of interest payments. And we're going to have this debt ceiling thing that's going to get raised whenever it gets raised, and they're going to add an enormous more amount of debt. And I think and I'm kind of a conspiracy theorist here. I think what's going on is the only way out of the crushing debt is really inflation, and to basically inflate away that debt and to lower short-term rates so that that line item in the U.S. budget isn't quite as high to really affect other government spending. So if I'm thinking about potentials for next year, my guess is at some point there's a credit constraint in the banking industry because you have now you're ending this, all this liquidity that's coming out of the reverse repo facility into banks that are already constrained, right? Short-term rates will probably continue to come down a little bit as, the labor market starts to see pain from, what's going on in the banking market. But at the same time, long-term rates go up because inflation picks up and, there's probably going to be something going on with credit quality because of the ceiling and all that. So that's, it's really hard to predict this stuff, right? I used to trade interest rates and I can tell you what's going to happen today, but something might happen tomorrow that'll totally negate everything I just said. But it just is what it is. But that's my guess. And, I've been talking to a lot of people that, are looking for loans like, oh, well, I'm going to wait for rates coming down. I'm thinking, I really don't think you should do that because this loan might even be here at this time next year. On top of that, if you look at the amount of commercial real estate debt that's coming due over the next 3 years, it's this today, that tomorrow, that it's a wall. So all of, this stuff is really happening at not a great time for commercial real estate refinances and other, business refinances. So it's going to be interesting, but we're all going to find out together what happens. So.
Yeah. We can all hold hands and figure it out together.
Yeah, it's going to get figured out, right? That's the great thing about commercial debt. And that's why I've told people too, they're like, oh, there's going to be this commercial, disaster and this and that. And I'm like, yeah, maybe. But there's always a buyer at some level in commercial real estate.
Yep.
Right. Residential, there wasn't. That was the problem there. There was just no buyers. There's always a buyer for some apartment building.
That's a good point. Well, and I was going to ask too, I know you kind of touched on it, with all this, especially commercial real estate, people took on this short-term loans, low debt in 2021, 22, and those have come due, right? And are going to continue to come due. Seems like banks are kicking those down the road as long as they can, right? What do you see with that?
I watched this play out firsthand many times. What's happening is, and it's not as much the banks that have these short-term loans. It's a lot of like debt funds and stuff like that. That like, the expectations didn't work out the way they thought. And the funny thing is the property itself is perfectly fine.
Yep.
Like I was just working on this loan with this deal in San Antonio. I mean, the thing's 95% occupied. Okay. They just didn't achieve the rents they thought.
Right.
Right. So,
well, they probably were banking on 4% interest rate. Right.
They needed super low interest rates to get out, and rent growth didn't pan out the way they thought. Yep. Right. So these things were priced. This is a symptom of too much liquidity in the system. Right. People were doing dumb loans, and they were like, okay, well, they were underwriting based on just a snapshot in the market. And as long as things continued on the way they were, cool, you get out of it. But if they didn't, then the thing was stuck because it was priced to perfection. And what happened was, both sides of the equation moved on them. Revenues didn't pan out to where they thought they were going to be. Expenses, cost of capital was higher, right? So thing just doesn't work. And I was, working on this deal in San Antonio that was exactly one of these. And it was with a debt fund. And what happened was the debt fund just kind of hung out. The loan was in technical default, right? But they just let them kind of like, kick the can down the road. And they tried to, it was a syndicated deal, of course. And they tried to raise equity. They couldn't. So what happened? They ended up selling it. Somebody bought it. Lender got fully paid off. They didn't actually put the loan ever in default, right? And away they went. So that's what I'm seeing happening, right? They're like, these lenders are saying like, okay, go try to raise equity. If you can't, sell the thing. Yep. And there's a buyer. So
interesting. Yeah, and actually I don't syndicate. I think that's initially I thought it was I don't want to say the wrong move, but obviously I can only go so fast not syndicating. But times like these, I also feel pretty good about myself because it's like I put my own debt into these with down payment, so I've got some wiggle room there, which has been nice.
Right.
Are you seeing mostly syndicators in tight spots? And not to pick on syndicators because obviously some are absolutely crushing it too.
I mean, listen, man, syndicators live on, I think the better way to think of it, it's like a transaction shop, right? They put deals together, they're transactions, and they get people to invest. They put the deal together. A lot of them basically what they're really getting out of it is maybe like some GP promote and then like fees.
Yep.
So that's what they're in it for. Like the same deal I was working on, where like all of the equity was getting completely wiped away. They were still in acquisition mode doing deals, like other deals, right? They were literally buying other deals that were in the same scenario that this property was in. Yep. There's nothing wrong with getting involved in a syndication, but I think the people that are investing in them that probably needed to pay a little bit more attention to what they're doing and not just kind of like blindly invest. But the issue with syndicators is when you have to do a capital call and come with more money, like who do you have to go to? You got to go to your LPs, right?
Yep.
And do they double down or do they just let the property go? And I don't think there's anything wrong with that. The syndicators feel a serious need of like providing investment product. But it's like anything. It's like getting involved in the stock market when it's, at all-time highs and then getting upset when it takes a dive down. It's like, well, you bought at the height of the market,
Yep, for sure. What's and we've kind of gone over in other shows explaining the different types of debt, but what debt do you offer?
Effectively all kinds. I mean, what I do primarily is fixed rate perm mortgages, bridge loans, and construction loans. The capital sources we use are obviously, like I mentioned, banks, credit unions, debt funds, government agencies like Fannie Freddie, other, or more conventional CMBS. And, we use some life codes here and there as well. The stuff that we do, I mean, listen, if you look at a pie of like actual like commercial lending, it's really banks, credit. I mean, it's like 80% banks, right, that do all commercial loans and credit unions. And then like other lenders take up the slice. So our focus is a lot on, bank and credit union lending. The issue with that stuff is, I've been doing this for 16 years. We have a really efficient process, but the issue with most, banks, credit unions, and like trying to get through to them is it is a pain in the ass. Like calling banks and actually getting through to a commercial real estate loan officer and getting the guy to call you back, and then, kind of like navigating their credit process. A lot of times, I mean, this is really interesting. This is a good example of dealing with banks. I make it a point. So when we put together capital markets for each individual deal, right? And a lot of times that ends up being somewhere between 200 to 300 lenders every time. But I make it a point to have like 3 or 4 guys at the same bank, because I will get different answers from every single one of them. And sometimes it's like a guy that's sitting in the same, like they literally can see each other from like, like across the hallway. Like,
why is that?
One guy will be like, "Oh, you don't really think it's a deal for me." Another guy would be like, I already did enough volume this quarter. I don't really want to work on it. Another guy's on freaking paternity leave. And then I'll find the last guy and he'll be like, "Oh, this is phenomenal. Yeah, I just closed a deal, so I got capacity to like work on this and blah, blah, blah." And I'm telling you, this happens every single time. Sometimes I'll be sitting here with like in my inbox, and I'll have the emails sitting right on top of each other. There's one guy saying, "Hey, our bank would never look at this." Other guy saying, "Man, our bank would love this." And I'm just like, okay.
That's crazy. That's a good point. I never knew that.
Oh, yeah. Yeah. Understanding like how these banks work and the commercial real and how the loan officers work is, once you kind of understand, it is much more of an art form than a science, 100%. And, just understanding the mentality of like the commercial real estate, like loan officers, first of all, I mean, they're sales guys, right? They are. That's exactly what they are. Just enticing them to get interested in the deal, right off the bat and call you back is a little bit of a challenge. Understanding like, hey, did you just send me like, and candidly, the 99% of bank term sheets are absolutely worthless. But like, when we get a term sheet for bank, I'm like, all right, did you actually underwrite this thing? Right. Does it work? Are you just sending me numbers on paper? And then like, what we do is like, well, we make sure that it's underwritten. We make sure that the guy's actually like vetted it with his chief credit officers and board. And then like talk to like higher ups so that, we've chopped as much wood as possible to kind of get all the things that are immediately going to kill this thing out of the way. And then going through the whole process of, like, hey, what kind of appraisers you're going to use? Are you going to, what kind of org structure do you need? What kind of guarantors, all this stuff. Like the challenge that banks a lot of times are, it's not like even at property level economics. It's more about like, understanding like all the other minutia around just dealing with the bank itself is what's hard to get it through with them. Yeah. And then like, their credit committees are, every one of them is totally different. Like sometimes I've had deals go to credit committee and one of the board members was just some like 65-year-old guy that, I don't know, had some like history with the property back in high school and didn't like it. So he declined it. I mean, that actually happened. I'm like, are you serious? Okay. So it's always a journey. And for the average person, this is why like I tell people to think of us like a service provider, not just loan options. Like for the average guy out there putting together deals, trying to get all this together, like navigating this bank market, especially today, it is so unbelievably time consuming. And, knowing how to appropriately work with these banks, like it's really tough. And that's really a lot of the value that we bring, right? Is I talk to probably 60 bankers every single day. And I don't think anybody's talked to more banks than I have over the past year. So, that's really the value we bring.
Yeah, no, that's a ton of great information. And kind of maybe a selfish question, but are there loan products for lines of credit on commercial assets?
Yeah, so we do those. The thing about like lines of credit, stuff like that, there's nobody out there that's saying, hey, we just offer lines of credit in commercial real estate. Right. I mean, there really isn't. You'd have to just walk it. You almost have to make this product for yourself. Like I did get a couple term sheets yesterday that included like a first mortgage with like a line of credit. And they structured it that way instead of what I originally was looking for was, a refinance of cash out, but they structured it as like a refinance of first mortgage with a credit facility on top. I think for banks that optically looks better when the FDIC comes in and like, audits them than just providing somebody cash out because they're giving a loan instead of just here directly. Right. But it's not something that they're just saying they offer. You kind of have to go in and make this product for yourself. So if that's what you're looking for, it would probably take talking to a lot of different banks to get them to agree, because most of those lines of credit are in second position.
Yep.
Right behind some other note.
Yep. Yeah. Well, I've talked to a few other owners that are, have, and myself included, we have great debt. We don't want to refi that debt out as long as we can. We've got 10-year balloons, and there's no reason to do that other than try to access that capital. So obviously line of credit would be
we do have something that we have that is really interesting is this like small balance pref equity product that just will give cash out to anybody for any reason that works for like storage and hotels and hospitality and multifamily. That has been a really good option because a lot of times those lines of credit, I mean, think about it from a bank's perspective. I'm like, hey, I'm doing like a $500,000 line of credit behind some like $3 million mortgage that somebody else has.
Yep.
Why would I do this? Right. But I've used this pref equity product that works really well as cash out. That's the only thing like that I've ever seen in the market. And that has been working really well to not disrupt people's first lien debt. And that works for like even like agency type of stuff. So and they'll go down like $200,000.
What's it look like? Terms, basic example. Actually an amortized. Well, sometimes they'll do just a term with IO and then like balloon, but it's primarily like an amortizing type of like pref over like 5 years. Got it.
There's no lien. It's a cash flow product. So if the property has to support it through cash flow, they're not going to do like they can't do construction or value add with it or something like that. It's not that type of pref. But if you have a stabilized deal that cash flows and you need like $500,000, you can throw this in there. I think the IRR is something like mid-teens, which you would expect for pref, especially like small balance stuff. And it just gets paid off over 5 years. But it closes in like 2 weeks.
Oh, wow. Cool. Yeah. Cool. Good to know. What we miss other than, and we'll get into where people can find you, but what else should people know?
Well, we're busy, man. I mean, what really, I mean, as far as the market, I think people are wondering like what's going on, right? And like, what's the mentality out there? Yep. Right. And what's the appetite for new investments and when are things going to pick up? Right. Because CRE was frozen for so long because of the cost of capital. But it's really, I mentioned this earlier, like, I mean, dude, there's just not enough minutes in the day, since the election, like how many calls we have going on, how many people looking for equity, the deals that need to get done. And I think from this point forward, it's just going to accelerate because again, you have this wall of debt that's coming due. I think the policies that the new administration are going to push through are going to be very pro real estate, right? Also, if inflation sticks around, which it probably will, real estate is a great hedge against inflation. I just think, there's going to be challenges. There's going to be challenges navigating it, and the cost of capital on the long end will probably be higher than people are expecting. But if there's places to hide out in the short end of the curve. But just the amount of activity I've seen since the election in this space has been almost to the point where like I just don't have enough minutes in the day. So investor sentiment is definitely gone way up.
That's cool. That's good. Well, Good and bad, I guess. I kind of liked it when no one was looking at real estate deals and I could pick some up. So
yeah,
starting to get crowded again.
There's definitely people trying to do deals again, like hardcore. Some, but again, there's going to be something out there that happens in this bank market. I mean, hopefully not, right? But like there probably is because of the stuff that I mentioned. And, it's going to be interesting because there probably will be more of these types of deals that like the San Antonio one I told you about, that people can pick up at lower basis. So we'll see. It's going to be interesting.
Yeah. Awesome, man. Well, it's been great information. I've got basically just 3 kind of podcast questions.
Sure.
What are you better at than anybody else? So kind of your superpower.
I think the things that have really helped me over the years is like a couple of different principles. I mean, one skill was cold calling, obviously. But then I also look at things, I think, a little bit differently, in my business. And one of the main things is like having the principle of like knowing what not to work on, right? Mm-hmm. The things that waste your time so much is just stuff that like you shouldn't be working on. And like when I originally started, I would deals would come in and I would put the same amount of energy and focus into every single thing. And, I started to realize like, hey, if I just didn't work on this crap that was going to go nowhere, and only worked on deals that were really actually worth it, had a higher expected value, like, that would be a much better use of my time. So really being able to identify things and say no, candidly, and turn business away. That was one of the greatest skills. And then also, focusing on what aspects in your business you can actually control, right? If you actually identify the things that you actually have any control over, it's probably much less things than you actually think. And again, if you're putting your focus and energy into the aspects of the business that you can actually have control over, that's going to get you much further ahead. Because I think a lot of people put so much focus and time into things that really they don't have much influence over.
Yep. That's awesome. Well, and I I really like the focusing on what you need to focus on, right? What's the money maker? And to sum it up, distractions, right? Get rid of distractions. And that can be something as big as, you're drinking too much, partying too much, you're watching football for 4 days out of your week, down to, you looking at deals that may not ever work out. So yeah, distractions are huge.
Well, especially in real estate. I mean, in real estate, like people have no problem wasting your time.
Yeah.
Like at all.
Yep. A lot of tire kickers.
Yeah. And like if you're in this business long enough, you'll get the call. Everybody knows the guy that's always this far away from doing a deal, and he's got all this stuff going on. And then you really dig into it. And it's like, well, okay. So yeah, really, kind of asking the right questions and identifying like how real this stuff is. Because I get those calls all day long, right? Where it's like, hey, I need you to price a deal for me right now. I'm like, well, is it under contract? No, I'll send you a LoopNet link. I'm like, yeah, it's not gonna happen. So that doesn't sound like a good use of my time.
Yeah. Well, and that's, I'm sure a lot of newbies too. And it's where they've got to learn, like, reach out to people other than, you got to find a lender, obviously, but yeah, you got to somehow, investors, especially newbies, need to figure out that they can't just waste your time. And yeah, there's a whole process that we don't need to get into. What's next for you?
Building out this business. Eventually I'm going to find somebody to take over the debt side, but, and work and really be able to focus on, the whole umbrella. But just, keeping this going. It's going to be really interesting over the next couple of years, what happens.
Yeah. That's awesome, man. That's awesome. Well, and actually I was at a mastermind a month, 2 months ago, and we talked about, there's a guy that spoke, I guess social media famous guy that spoke, and he talked about living in the 1, 5, and 10-year vision. That's all he does. He's like, I don't do anything else. He just lives in the 1, 5, and 10-year, which is simple, but at the same time, how many of us are truly just doing that? That kind of blew my mind, and I've been chewing on that since then.
Yeah, that's a good point. I mean, I think I've somewhat, without paraphrasing right like that, but somewhat doing that now.
Yeah. Cool. Awesome. Last thing, where can people find you?
Man, I am too easy to find. You can probably find my address if you like.
We don't want to go that far. Don't give up.
Yeah, no, don't do that, please. No, I mean, listen, I'm LinkedIn, Jake Clopton. Our website is cloptoncapital.com. Our phone number is right on there. Hit me up anytime. I'll take any phone call. So I'm always around.
Yeah, we'll have that in show notes too.
Cool.
So awesome, man. This has been great information. Definitely recommend people reaching out to you if they have any deals coming up. And again, appreciate you coming on, man.
Appreciate it. Thanks, John.
See ya.
Thanks for following, subscribing, and listening to this episode of the Do More podcast hosted by John Farling. To learn more or ask questions, go to l4investing.com.